Hey there, happy Saturday, everybody. Tim from Alpha Wolf Trading coming at you with this week's market overview and stocks to watch for next week. Clearly, markets are experiencing some headwinds, and I am raising the caution flag as we head into next week, the end of September, beginning of October, which has got October gets a bad rap for the bulls, but there are enough technical indicators out there right now to absolutely be somewhat concerned. So we'll get to that in a minute. Let's take a look and see what's going on in the this week for the economic calendar. We've got Chicago PMI, ISM manufacturing, market manufacturing PMI, construction spending, motor vehicle sales. And then weekly jobs claims, ISM manufacturing, and then the big jobs number on Friday. All the headlines this week are with the impeachment inquiry. I do think that this whole impeachment thing creates a lot of uncertainty about what's going to happen, and the markets typically do not like uncertainty. So. And then if you look at some of these charts, which we're about to do, there's enough reason to maybe just kind of hang out on the sidelines. So let's take a look at the indexes. So last week I mentioned that the IBB was something that I was feeling pretty good about as we headed into the week last week. We were bumping up, we were flagging right below the 200-day moving average, and that just fell apart this week. So one of my favorite sectors for the week last week actually kind of gave up the ghost and wound up breaking down below an area of key potential support as well as this trend line, and that was a little bit concerning last week. And then the IWM, which is another concern for me heading into this week, was we popped up into this area of resistance. This is our fourth test up into this area, and we failed. And now we're breaking below the 50-day moving average, breaking below the 200-day, and that is definitely a concern. So let's see if we pull back and we test this 145 area, could act as potential price support. But if we lose that, we lose this trend line, I think things get a bit more concerning. IYT transportation, potential double top situation there. And we are flirting with the 50 and 200 day as potential support. We'll see if that holds. But if not, we're potentially coming back down to this area of price support down here around 175 or so. QQQs broke below the 50 day. Broke below this short-term trend line. So a little bit concerning there with the Qs. SMH, Micron, not a great report on last week. Semis could see some pressure. We break below this 50-day. The next area of potential support would be this trend line. We break below that trend line, we could be coming down and looking at a test around 105, the 200-day, and the semiconductors. So a little bit of weakness there. Let me get back to S&P 500, and this is after a potential double top as well on the SMH, right? And SPY, S&P 500, looks like we just closed below the 50-day moving average. We've got some resistance here, potential double top, right? And we're pulling back. So everything, all the sectors are looking suspect right now, and I think we need to be somewhat cautious. TVIX, UVXY, if we really do roll over, we're likely going to see an increase in volatility, and this is going to create some opportunity within TVXY and UVXY. And if we break this long-term trend line with any kind of conviction, it could be the start of a new trend in volatility. Now, those are not meant to be long-term hold plays, but definitely think you want to keep an eye on these for trading opportunities, whether intraday or maybe short-term swings with a small position. You have to play these things size appropriate, but definitely want to keep an eye on the volatility. XAR, aerospace defense, been one of the strongest sectors out there, pulling back, testing the 50-day moving average, and actually broke below this little trend line here. We'll see if that weakness continues, but I would, if you have profits in aerospace defense, probably not a terrible time to lock some of those profits in and maybe build up some powder for put it on the sidelines for when maybe we get a pullback to an area of potential support. Maybe look to dip back in, but aerospace defense, a little bit concerning there. XHB home builders, look, nice looking setup on the daily and got some good numbers out of KB Homes. We've got another home builder reporting this week. It's been a very strong sector. However, if the markets roll over, I would expect that XHB will do the same thing. So there are some interesting charts within the sector, but it may be outplayed right now. So if the markets roll over, I wouldn't be surprised if we saw a pullback in XHB. XLB building materials testing the 200 or testing the 50-day as potential support. May wind up testing this trend line. If we break below that, I think we come down and test the 200-day. Energy, another, continued weakness in energy. Has been a pretty wild ride there. The question is, are we going to come back down and put in a lower low? So we'll see, but energy has been a tough trade. There's been some nice short-term trading opportunities if you can catch them, but they don't last for very long. I definitely don't see this as a trend reversal for the energy sector. Not yet. Financials, a little bit of weakness there. Potential double top on that. XLI Industrials, multiple top on XLI Industrials. Is right now currently sitting above the 50-day moving average. We'll see if that winds up breaking down. We could come back down and test this area of support around 72. And consumer staples is actually kind of flagging out a little bit here above the 50-day, above this trend line. If the markets roll over, that is considered, even though I do think there are some very extreme valuations within the space, that could get some follow through. That could continue to move higher, even though you have some rich valuations in the space, because it's considered kind of a safety trade. So XLV healthcare broke below the trend line, coming down to an area of potential price support below the 50-day, below the 200. Not looking all that great in the healthcare space. And let's take a look at consumer discretionary. Testing the trend line, just broke below the 50-day moving average. We lose this trend line, potentially coming down to test that 200-day. And XOP, oil and exploration, right? Just like XLE, some decent weakness there, back below the 50-day. The 50-day is still declining, below a 200-day, still a sector that I think you need to be somewhat cautious of. And I don't know why, but for some reason I don't have XRT on here. Hold on a second. Hold on 1 second. Let's take a look at a couple other things. We've got dust, which are starting to bounce a little bit, right? The gold miners and gold are actually pulling back because of the strong dollar. This news about we might delist China names, I don't think was something the market really wanted to see. And that gave some strength to the U.S. dollar. We'll see if that strength continues. If it does, then you could continue to see strength in dust and JDST. But let's take a look real quick at retail XRT. So pulling back up below the 200-day moving average. Looks like we're trying to hold on to the 50-day. Costco reports this week. That could impact the retail space. We'll have to see how it plays out. But overall, the charts are looking they're looking a little bit bearish, right? And I think we need to be somewhat cautious. Now that can all change with one tweet. We know, right? Everything could turn around with this China thing. Who knows? But right now there's a lot of uncertainty out there. The charts are looking somewhat weak. We're coming into October, which has that psychologically. A lot of people think that October is a weak month or a bad month for the bulls, and I think we need to respect that. So let's take a look at the stocks that are on my radar that are reporting earnings this week. I'm going to start out with NG. This is a gold name that had a very nice run. It is testing 6 as potential support. This reports, let me see when this reports here. Hold on a second. Let's see. Okay. Sorry about that. Sorry about the delay there. Let's see. These guys report, NG reports on Tuesday after the close. If they report a good number, we could see a nice pop back above the 50-day moving average. If they disappoint, we could see this thing break down below 6 and very well could be headed back down towards the 200-day or even the 450 level. So there could be a short opportunity there if it breaks below 6 with any kind of conviction. And it could be a long opportunity if we can get back above the 50-day moving average, and maybe we head back up and test in this $8 area and see if we can take that out. AMRS, look, I'm not real fond of this name. Could be a day trading opportunity on a break above 5. They report Wednesday after the close. This thing can be a pop and flopper. They have a lot of debt. There's a lot of this company to me has a lot of potential issues, but this 5 area is a big spot. If they can take that out with conviction, there could be a day trading opportunity there. We do have a potential golden cross about to occur with the 50 crossing over the 200-day moving average. If they give a good earnings report and have a good guide, and this thing pulls back to the $3.80 to $4 area, maybe there's an opportunity for a bounce, for a swing. But it would be a very speculative, higher risk swing just because of the amount of debt that this company has. It's worth having on the radar for a trading opportunity. Definitely would not chase it if it gaps up. But it could set up intraday for a trading opportunity. So worth keeping an eye on AMRS. RPM, fantastic looking daily chart. This thing gapped up. I don't know if that was earnings related or not back here. And it's just been kind of consolidating for quite a while, just below the $69 range. If you can take $69, $70 out with conviction, let me see if this is all-time highs. This is blue sky all-time highs, and maybe this continues to run after building this little base here. So they report on Wednesday before the open. We'll see if they can take out $70, but this one could be worth keeping an eye on. It's kind of got a big cup going on. It's this is a big spot that it's trying to get through. The last time it consolidated up there, it didn't do so well. It didn't fare so well, right? So it's worth keeping an eye on this one for a potential. It could be a swing opportunity, right? Could be a swing opportunity. But let's see what the earnings come in at on Wednesday. SGH, not a good looking chart. Semiconductor play, Smart Global Holdings, pulled back to the 200-day moving average and an area of potential price support. Nearly closed. Actually, it looks like we did fill that gap, actually. Gap just filled, bounced off the gap fill, and it's flirting with this 200-day and trying to hold on to the $25 holla. Now, if they disappoint, you got a potential double top up here. If they disappoint, we could be heading back down into this $17 range, right? Actually, first area of potential support could be around $20 or so. It's worth having on the radar. It's not a big float. It doesn't look like. Hold on a second. I want to make sure. I can't really trust the TC2000 anymore. Hold on one second. Okay, yeah, so this has got a fairly small float, this SGH. It's only got 13 million shares in the float. It looks like there's about 16% short interest. Cash, they got 126 million in cash. They got a 207 million. I mean, the financials look fairly decent. Operating cash flow of 111 million. It's a pretty interesting looking area. I mean, this is a pretty interesting area for this stock. If they report better than expected numbers and a good beat, you could see a nice pop on this one. So, like I said, small float, worth keeping on the, worth having on the radar for a potential trading opportunity off of earnings. LMDC. It's another one. This it's got an interesting look. It's in an area of potential support. This one also is a fairly small float. Let me take a look. Oops. Let's see, 25 million shares in the float. The deal with these guys is they've got 108 million in cash, or 1 million in cash, and they've got debt of 153 million. Positive cash flow, but not a great looking setup there. It looks like I've only got about 6% short interest. It's in an interesting spot for a potential bounce. Break over the trend line, get back above the 200-day. Could be an opportunity there for a trade. Worth at least having on the radar off of earnings. Kind of got a cup with handle thing going on. We'll see how it plays out next week. Costco. So, I think we need to at least watch the earnings, see how the market reacts, see what the retail sector does. They report after the close on Thursday. This thing has been a beast. It's been an uptrend for quite a while. It is testing the 50-day as potential support. We break below that 50-day. It could be coming down into the 270 area. And then you break below 270, I think it gets problematic because you're breaking this longer-term trend line. So I think it's worth keeping an eye on Costco. After earnings, SFIX, I'm looking at this one thinking this could be a potential short if it breaks below $17 with conviction. If these guys disappoint on earnings, you're going to be taking out a very big area of support. You've got a death cross on the daily, right? And I believe this has got a fairly small float as well. SFX, SFIX, sorry. Oops. SFIX. All right, so this has got, no, it's not that small of a float. 46 million shares in the float, 33.5% short interest. So look, if these guys report a blowout number, give good guidance, this thing could get a little squeezy because it's got such a big short interest in it. But if they disappoint, and we break below $17 with conviction, I think you're going to see shorts pile on. So worth having on the radar, maybe for a short. And then ANGO, same kind of setup here, where we could see a break below 1770 or so with conviction. Now this is an area of potential support. It's a pretty big spot for ANGO. They report on, looks like they report Thursday before the open, right? So if we break below 1750 or so with conviction, that could be another one that is a potential short. And let me see, ANGO. Let's see, 36 million shares in the float, 4% short interest. Not a big short interest on this one. This is definitely an interesting area of potential support. If it breaks below that, I think it's problematic. So we'll see how it plays out. But that is my list for the week. I think you want to keep an eye on TVIX, UVXY for short-term trading opportunities. I think you need to be extremely cautious out there right now. I think if you have stocks that you like in an environment like this, you start to identify areas of support, areas of resistance, but areas of support maybe where you would like to, if, a good company, if the markets roll over, good companies will get taken down, and sometimes they don't deserve to be taken down. So you start identifying those areas of support where, wow, if it got down here, is this someplace where I'd like to own the stock, right? Does it make sense to maybe start dipping the toe? I think that's what you look for in this kind of environment. You play size appropriate, don't go in too big, and that's it. All right, pro members, I will have the full list of stocks to watch for next week for you guys out tomorrow morning. Everybody enjoy the rest of your weekend. Be safe, have fun, good luck trading next week. Be careful out there, and I'll see y'all next week.